What's up? Welcome back to the Kris Krohn Show, and I'm here with Curtis Ray to talk about the 401k dilemma. The 40-year 401k has come to an end, and its creator basically said it's a failed experiment. It didn't work. It's not getting Americans what we need. And Curtis, you've a lot to say on the topic of the whole 401k myth. It's practically a hoax.
Yeah, I did write a book called Everyone Ends Up Poor. And it's about the ones who trust in the 401k and the IRAs and the Roth IRAs on how I believe they're built backwards. They're literally built to be really quick in the beginning, low fees in the beginning, only to decelerate their returns as long-term as their fees increase also. And it's creating this path to the majority of Americans downsizing in retirement, even the ones who save heavily in them. They're not built right.
So you're actually working with lobbying the government for creating a total different approach to 401ks. And that's why I want you to be interviewed here today. And I want everyone to know your name and who you are, because I think you're literally creating the 401k replacement. Before we jump into that, let's just talk about your history, who you are, your financial expertise, your specialty. Let's go.
Yeah, I started a granite countertop business in 2004, home remodeling. I like making money. Don't we all like making money? And it was a great experience. I learned a lot about business, about life and all that stuff. But in 2014, like every entrepreneur, I had a really bad day, lost a ton of freaking money and said, why did I do it that way? There were so many signals and so many signs that would tell me, hey, you're on the wrong path. Even though you're making money, you're not protecting yourself. You've got problems. And in 2014, when I had my really bad day, woke up really, really poor and said, I'm going to do it different this time. And also said, you know what? I'm going to be the world's expert on not how you make money, because everyone tells you how to make money. There's so many professionals like you, and everyone is just like, here's how you really, really build wealth. But very few people like us are telling people, here's how you keep wealth. Yeah. And that's the hard part of the equation.
So here's the crazy thing, because there's a ton of people that are listening and watching that may not know the stats. When you take a look at what happens at the age of 65, the average American who trusted in the 401k and the IRA model has put together $254,000. And they bring it to their financial planner, and the financial planner says, well, listen, you're spending 80 grand a year. So you spent 40 years only building up enough money for 3 years of retirement. We better not waste it all. Let's annuitize it. And so then they try to annuitize it at 4%, and you take 254 grand.
10 grand.
and you're looking at 10 grand a year, or you're looking at like $800 a month. And it's like, can you retire on $800 a month? You add in some Social Security, and most people look at you and they're like, that's crazy. This is now poverty level talk. And I'm like, well, you just retired below the poverty level. How did that happen? It's because you trusted in the system and you never doubted it. Along the way, you got swept up into the whole idea of, oh, my company's giving me a match. It's like free money. And so people buy into this model, but the vast majority end up super disappointed at the end of the day. I've met a handful of people that are even like, hey, we did it successfully. I saved up $600,000 or $700,000. I'm like, cool, now you have like $2,000 a month for retirement. How does that feel? And they're like, what? It's like such a rip-off moment in their life.
Yeah, in my book, I talk about that even the person that achieves millionaire status inside their 401k IRA, which is less than 2% according to Fidelity, end up retiring with around 40 grand a year. Yep. So this person who lives a lifestyle, probably 120, 150,000, did everything right, ends up a millionaire because their financial influencer on Instagram or TikTok or wherever said, hey, go get a Roth IRA 401k, you'll end up with $1 million and you'll be a millionaire and life will be great and you'll be financially free. Even Dave Ramsey says it. Pay off your house, save in a mutual fund, you'll be a millionaire and you'll be debt free and poor. They forget to tell you the whole and poor part, because if it doesn't produce income, it had the complete wrong goal, and that's where everyone focuses on account value and not income.
Brother, you're making waves and you've pissed a lot of people off. You sometimes put content out there that upsets a number of influencers. I just want to go right there. What is it that you're talking about that is so upsetting to the financial markets right now?
There's a few things. First is fees, how fees work, on how the financial advising community typically charges a % of account value. And so it's really small in the beginning because you're not saving very much or you have a small account. And as your account gets bigger, it exponentially compounds on itself, producing this, like, I call it unethical fees, and they just hate when I say that. And then they don't disclose or they don't explain well enough that your policy or your plan or your investments are actually built backwards often. And that is, they sprint in the beginning. Then as you get older, you typically transition to more security. So I call it, they sprint in the beginning, high risk, high reward, then they run, then they jog, and then they walk. You're literally walking in retirement, and what that does is kill your income potential, and so you end up rich with no money, and you end up dead freaking broke, and it's just this lack of education, lack of everything.
It's kind of a financial myth, right?
It's complete financial myth.
Debunk it right now.
Yeah. So the 401k is built in index funds, mutual funds, and this index funds, mutual funds can often make you about 10% rate of return. But as you said, when you near retirement, they transition about 50 to 60% of it into bonds. And when you do that, you're only making 4%, 5% on average.
Well, the 20-year average just came out for 2024, and the average 401k is producing 4.2%.
Oh, that's absolutely disgusting.
Yeah.
And so the amount of income you're making in your later, or the amount of interest you're making in your later years is pretty much your secure income distribution amount. So you end up with $1 million, you end up with $40,000 of retirement income. The average American has $200,000, so you end up with $8,000 to $10,000 of income. And why I wrote my book called Everyone Ends Up Poor, because even the person who does it right, the millionaire, ends up dead freaking broke in retirement. But then there's the 1%ers. 99% end up there, and the 1%ers are the ones who can think beyond what they're told to do. They can get into real estate. They can get into insurance contracts. They can do all of it. And I just spoke recently, and I say, this is an and game. Once you start understanding it's an and game, I want that and that and that and that, and collectively compounding them on top of each other, those are the ones who achieve financial freedom.
You're doing something very different than most people out there. You created a company called MPI, and you've created a solution, a replacement to the 401k that actually gets people what they want. Can you talk about it?
Yeah, obviously it's in development right now, but we are building a 401k complete replacement. We have a lot of other really cool things, but they can't fit into a business model with the government and the IRS and the match strategy. But we built a strategy that allows for you to have the growth potential of the sprinting method of a 401k IRA, but not transition into the security method, so you can maintain high rates of return. And if you can maintain your high rates of return, then your income can double, even sometimes triple. And that's something I've been working on for about 2 years now. We're at the, probably midpoint right now. I think in the next year, it should be something that can present to
So you might literally you might be the father of the new 401k, give it a new brand, give it a new name, and give people more hope.
I believe in the next 5 years, there will be a solution on the table that can produce up to double, maybe triple what the current 401k produces, with more security, still maintaining the match strategies that people like to take advantage of, and just producing financial freedom across the board for so many Americans.
But in the meantime, you're doing something different that is helping a ton of people. You really come from the life insurance space, but you're leveraging life insurance very different. You're not just doing like writing term, having something for your family when you die. You've created a different product already there. Talk about that.
Yeah, so we have the MPI strategy, and this thing totally freaking kicks butt. It is a life insurance policy that we've been able to design at the absolute lowest expenses possible. There are a lot of flaws to life insurance. There's amazing benefits to life insurance. Your life insurance, your living benefits, tax advantages, legal protections, all these things on why a lot of wealthy people buy life insurance to get these advantages. But growth is not one of the advantages. It just typically doesn't grow very well. We've been able to design a policy strategy that allows for a match to go inside the policy. The insurance company will add money to your policy. It's not your money to keep, but you can keep all the interest it can earn you.
Really?
And now you add your moderate interest of a normal contract, but with security and all the amazing benefits that I get to it, plus the additional interest added from this match strategy, and you add those together, now it's actually running very competitive with the stock market while having all the benefits. So now, instead of having the 401k and IRAs that have risk and high fees and no life insurance and no living benefits, and you can't even access until 59 and a half, you now have a strategy that can compete with them in the growth potential with all the benefits. And then the kicker on top of it, it doesn't have penalties to access money from these accounts. So it allows for people like you and other investors to team up with life insurance professionals and say, hey, let's use some of the cash value, some of the options, and some of the benefits inside these policies, and let's triple dip. Your money, the insurance company's money, and the investments, all creating compound interest potential.
So this is actually where my personal interest point lies, because I've never really believed in investing in my death or life insurance, but I love abusing it, using it to actually enable my real estate investments and my business investments. And I've been doing that for almost 15 years now. For someone that's not familiar with that strategy, how would someone that says, oh yeah, I'm a business owner or I'm a real estate investor and I'm looking for multiple spins. I want my money to give me, I want it to go further. And I've heard this weird idea that insurance can be used to make that happen. So let's talk to someone that is a new or an existing real estate investor, business owner that is saying, how does MPI's strategy, which is very unique to them, How does that leverage life insurance to help aid them in living a better life?
Absolutely. So if your investments, just to say on average, are making 10 to 20% rate of return, if you can get that money first qualified through a compounding life insurance strategy, you've now added the opportunity of making up to an additional 15% on top of that.
Wait. Explain that. Slow that down.
Yeah. And so inside of a life insurance policy, an indexed life insurance policy, we've created where we've suppressed the expenses. So it doesn't have the initial flaw that a lot of life insurance policies have where they cut your feet off right out of the gate. We've suppressed that. Inside this index strategy, you can make up to 10% rate of return in the stock market. There's an S&P 500 strategy. You can make up to 10%. Okay, so we're doing pretty well. You have guaranteed security and you can make up to 10%. But now, like I just said earlier, the match strategy is where the insurance company will now add money to your account. That match strategy has the potential of making up to an additional 5%. So if you were to go just to your investment and make your 10, 15, 20% rate of return, that's cool. But understanding that life insurance has liquidity available to it, it has all these features and benefits. You can get your savings first compounding up to 10%, maximize the match strategy up to 5%, and then use it as collateral to get a loan against your money. So now you have double the equity, double the assets working for you, and then go do your business. Then go do your real estate investing.
What does that loan cost when you want to pull that money out?
5%, below fair market value.
Okay, so you're saying that I can keep my money earning my 15%, take a loan out, which will cost me 5, and I'm still maybe earning up to 10.
Yep.
But now my money is sitting in a real estate deal, and on my last, we just looked at the last decade, on my last 2,130 rentals, we are averaging a 60% annual ROI.
Yeah.
So you're saying that if I ran it through a qualified life insurance policy with this strategy, earning me 15, I could then take my money out in time at a cost of 5, still earn 10, and then still be earning 60 over here for a total of 10 and 60.
Absolutely.
Oh
I think of it a little slightly different. I think of it that if you were to go borrow money from a bank to go do investments, that's part of the investment equation. So what's awesome about insurance is all the money sits in there doing exactly what it would have done with or without the leverage against it, without the lien against it. Then I want to go borrow money from a bank or an insurance company. I get 5%. This year, I have a 75% guaranteed rate of return, first position collateralized, making me 75. So I took a 5% loan, making 75. So I'm actually netting 70 on the investment while my insurance did exactly what it was going to do. So now collectively, I'm making up to 85% rate of return.
That's crazy because that's actually a really meaningful amount of money.
Yeah.
And that's really a cool double dip. So you're really leveraging the benefits of the stock market. You're getting all the benefits of life insurance. You don't have to choose between them.
Yep.
And then the triple dip is pulling it out and putting it into, I put it in my business. I put it in real estate. I put it in something different.
Yeah, and then you have the quadruple dip because you have the death benefit. That's another thing that is just absolutely, as a husband and father of 5 children, so many people end up passing away and they don't even have a term policy.
Yeah, it's weird.
Well, when you have life insurance, living benefits, and inside the life insurance contract, it's all growing tax-free. So you have another 30% advantage over traditional investments.
Are you saying that 10% grows tax-free?
Yep.
All
it's tax-free. And when you distribute it as income, can be 100% tax-free also.
Okay, so that's actually a really, really high return. The death benefit actually is interesting because, as an entrepreneur, we're taking risks to grow our business, and it's not necessarily a risk that our spouses want to inherit.
Yeah.
And so, when my wife's she's like, Kris, you're so overinsured. I don't know if you're worth more dead or alive. And I'm basically telling her, I'm like, honey, I'm doing this because, should something happen, I'm leaving you a big enough pile of money to just wipe out debts, pay things off, to give you peace of mind. It's not just to give you a pile of cash. It's you have real estate. Maybe you're uneasy that it's mortgage. Well, now you can just have it paid off and it can just produce those rentals
or
for you.
estate tax and things like that.
You got it.
A lot of people are not prepared for when they end up passing away.
Okay, so this is actually really cool. Curious, when people reach out to you, because what I'm hearing that's very different than what I've known in the past. I mean, if you compare this to typical whole life insurance, maybe you're getting 4, 5, or 6% on your money, but you're not getting 10 to 15.
Yeah.
So that's a wild difference. You are really actually getting all the benefits of the stock market plus, and all the benefits of the life insurance. How do people connect with you and reach out to learn more about this?
Yeah, so I'm on TikTok, I'm on Instagram, but the easiest way is text me to the number 20500. If you text the word MPI to 20500, it will send you an automatic text message back. It sends you our calendar. Go schedule a complimentary one-on-one to understand that a life insurance contract by itself is really powerful. But unfortunately, very few people design it and optimize it because you've got to really, it's objective. There are no subjectivity when it comes to life insurance. Is it designed max funded? Is it designed the lowest expenses? Are you maximizing every feature when the time frame tells you to do it? And if you do that, you can end up producing up to double, sometimes triple the results of a traditional whole life contract.
So there are people out there that do this bank on you life insurance thing. Like it's something that you look up and you learn about, and it's people like, oh yeah, this is how I got started. I'm like, I got this money that I've made. I'm going to put it into real estate anyway. And I've learned before you do that, put it into the insurance contract first, and then strategically over time pull it out and deploy it into real estate and basically get double winnings.
Yep.
So, but most of the contracts I've ever looked at, they're only paying out 6%, not 15%. Yep. So this is a huge, like that's a very meaningful number that I can stack on top and earn a way better spin on what I've been doing in the past.
Yeah, and so what's great about indexed insurance, so whole life insurance is obviously much more secure because you're pretty much guaranteed your 4 to 5, 6%, and that's called the dividend style of life insurance. I like to make a little bit more money. I'm willing to put a little bit more effort into growing my money, and so we do an index type insurance where you're in the S&P 500 strategy, so you can make much higher returns. However, there's a trade-off. Some years we make zero. So what happens is when the stock market plummets, our account value freezes. It's called a 0% return guarantee that you cannot lose money.
So you can't go negative.
You cannot go negative on your account value.
But you're not going to lose.
Yeah, and so we can grow up to 10% where the financial advisor can be like, oh, well, sometimes the stock market does 15 and 20. You're limiting your growth, which is true because we're only going to, with a 0 floor and a 10 cap, you're only going to make around 7.5 historically. However, when you add that match strategy in, now we're getting that up to an additional 5% inside there.
Yeah.
And you're making on the good years up to 15%. On the down years, you're still keeping that security floor blanket.
And are you still at least at 5?
Yeah. And now you're making up to, on average, even long-term with the zeros and the 15s, you can make up to 10, 12, 14% rate of return, depending how long you're in it and how much you're leveraging against it. And then we go do the outside investments to make our big money.
See, that's honestly more than double of what I've done in the past. I think that's what's interesting about what you do. One time for anyone that's listening, if they want to, what number do they text if they want to get a free consultation?
Yeah, so I'm going to give you 2 invitations right now because it's real powerful education. One, if you text me to the number 20500, the word book, just B-O-O-K, I'll send you a free copy of Everyone Ends Up Poor, ebook and audiobook. Watch it, listen to it, read it, whatever. Absolutely life-changing financial education on how broken the current system is and the solution of compounding. And then if you text MPI, or MPI Unlimited to 20500. Send you our calendar, but you can follow me on TikTok, Curtis Ray. I'm blue check verified, or I am Curtis Ray on Instagram. I post on there every single day, tons of content. I'll be doing a lot of content with you coming up pretty soon, hopefully on the real estate and how you maximize the leverage inside of a policy. And that's how you start making your 20, 30, 50, 100% rates of return while having all the benefits of life insurance.
Curtis, help me understand this. We're going to have listeners that are like, when does it make sense to start a policy? Like, I would put it this way, and I want to know what your professional opinion is. I tell people the most important financial decision they'll ever make in their entire life is pay yourself first. Yep. So most people, unfortunately, they're like, well, I got a job and I have bills. So I basically work to live. I earn my money, I pay my bills. And I always tell them the most important bill that you pay yourself is not your mortgage, it's not your cell phone, it's you. Yep. And I always encourage people that you should be saving at least 20% of what you make, which for a lot of people living check to check, that's a really big stretch. But if you can learn to save 20%. So it's like, oh, maybe you're starting out in life and you're like, I make $60,000 a year. Great. What's 20% of that? It's like, okay, that's $12,000 a year, let's just say. So it's like, I save $1,000 a month. Good. That's aggressive and that's hard to do. But if you do it, what you're doing is you're not saving to accumulate. You're not saving to keep it in your savings account. You're saving to invest because investing is the only way to get where you want to go. And so if you pay yourself at least 20% or more, it can stretch and redo your budget to figure that out. That puts you in a great spot to someday be able to invest. But where you stash your money is in one of these policies.
Yep.
So one of the questions I want to ask you is, what is the minimum amount that someone should be willing to save every month to make it worthwhile to set up one of these policies?
Yeah, so I go off the 10% number. 20 is awesome.
Yeah,
25 is even
aggressive.
better.
That's super aggressive.
Yeah, 10% is a number that in 2008, if you were working in 2008 and say you're making 50 grand and your boss came to you and say, I have to lay you off or work for 45,000, everyone takes 45,000 and you don't even change your lifestyle. Every single person can literally save 10% and not even notice after about a month.
Five grand a year in
$5
that
grand,
situation.
exactly.
But is there just like a threshold minimum? Like what if someone says, dude, what if I just want to drop in $100 a month or $300 a month? Like, is there options for them? Yeah,
so in order to maximize a life insurance contract, there are minimums. And that is it's according to your age, which is kind of weird, but it is according to your age. About 10 times your age is your monthly minimum. So if you're 20 years old, your minimum to maximize the opportunities inside your contract are at least $200. It's an at least. 30 years old, $300. 40 years old, $400. So it's within reason of everyone that you can have advanced, customized strategies that allow you to start building today. And yeah, you don't have enough to go do some pretty awesome investments, but guess what? 3 years, 5 years, 7 years from now, you'll have enough money where you now can start participating in advanced strategies, and now you're on the path to actually building wealth.
Kris, final question for you. What drives you? Like, you have so much passion for this, and I see you wanting to change the world, and I see you already starting to lobby. You're deep in this creation of a new 401k product, and it's more of what you're doing on steroids. But you already have a great solution in place. What is driving you to help as many people as you are right now?
I see so many people. My TikTok channel's got 1.5 million followers verified, and I see so many people who come to me, and they literally are hopeless. They're in despair. Like, everyone has this fake, facade, you know what I'm talking about, where they act like they have a happy life, they get in their closed doors, and they actually feel despair. And I've only felt despair one time in my whole life. And it was a terrible, disgusting feeling for about 12 hours. And I'm like, holy crap, people live like this.
Wow.
And luckily I've never had that as part of my life. And so when I go and I help people and they break down and they say, I now have hope, saving $400 a month, and even $400 a month for 30 years, and you're gonna get there. You will get there if you're disciplined, pay yourself first, move forward. The phenomenon of compounding is this really interesting thing that very few people understand, and that is it does not take anything special. It takes you taking one step forward today, another step forward, another step forward. No home runs are needed to become wealthy and confident and just have an amazing lifestyle. But you've got to make the decision to open the door and take a step. And if you do that, you will look back and say, single best decision of my life, and you will end up in a position you want to be in.
Kris, what you're really doing that I love so much is you're not the insurance guy saying, do a policy. What you're doing is you're saying, no, invest in your future, invest in business, invest in real estate. But insurance is the vehicle where you can maximize your situation while you're waiting to put it into the right thing. Because I believe everyone's got to invest in the future to get where they want to go. Thank you for being here. I've had a chance to meet your wife and your family, and I think that you're doing a really, really great work in the world. And I look forward to getting some updates in coming years on what's happening with this brand new 401k replacement. But in the meantime, sounds like MPI is creating really awesome solutions for people to enable greater investment by designing insurance policies that can allow you to really double dip between the stock market, your investments, and then of course it's growing tax-free, and it's really helping support your entire future. So thank you for the work you're doing in the world. And guys, remember Curtis Ray, look him up online, go find him, follow him, learn from him. He's a powerful financial educator. And with that, we'll see you on the next episode.